Good afternoon and welcome to the Blue Line Metals Edge here for Monday, December 5th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. Getting into the markets here today, we had an economic data point that came out. It was this ISM data, came out right here. This ISM Services PMI data came out 56.5. Expectations were 54.4. So as soon as we saw that release, that kind of uptick here, and that's what we're kind of nervous about, is that if a lot of this inflation remains sticky and goes on for a long period of time, and you kind of get this liquidity cycle where it starts to tighten because of those higher borrowing costs and rising interest rates and etc., you're going to start to see some concerns and some cracks in the market show up. So looking at equities here and getting into the S&P 500, it is correcting down. This is a daily chart. Doesn't look too chaotic on the chart, but we are down 50 points. So it's about 1.2% on the S&P, about 2% on the Russell. Russell's taking it on the chin here. 1851 last on the Russell. Here's your chart pattern of that. So again, it doesn't look bad if you look at a longer term chart, but it is a bit alarming that we may have run into some key levels of resistance, etc. Something interesting on the metals is that all last week, I had people calling in every day saying they were missing it, and it was this breakout to the upside that really had everybody concerned. But you get this correction like what we're seeing today. Silver down about 3.6%, trading at 22.40. I think this is a lot of those longs that got in late to the game. They're starting to liquidate on their positions. So down 86 cents at the moment. 22.50 is your downside probable range. We got down to 22.38, so we haven't hit another standard deviation of risk adjustments, but we are definitely correcting. Platinum looks interesting. I was saying 10.05 is what I listed on the Kitco article as a possible entry point, but that might be a little bit too soon. I think you maybe wait here for some of these key levels. 21.75 on silver. On the gold market, be 1760. On platinum, thinking closer to that, like 985. So if you look, it'd be down in this area right here where we get to these key levels of support. So other than that, a lot of other markets look pretty good. Soybeans look good to the upside. They've been holding trend real well. Crude oil is going to give you another entry below at $80. If you look at the March crude, 79.67 last, was up really big. The OPEC has reaffirmed that they're going to have 2 million barrel per day production cut. You're also going to see Russia. They are capped on the prices that they could sell oil at $60. So no one's allowed to transport any Russian oil that they paid north of $60 for. So we'll see how that works. Other than that, you got feeder cattle, live cattle pushed up to the upside. You got sugar looked really good. Got to the top end of the range. If you do get the tactical insights, you'll see where those ranges are at. I post a lot of the ones on the softs and on the grain markets. Got right to the top end, took some off there. Cocoa looks good, buying a pullback. You are getting a correction right now with the euro currency and also the British pound selling off. Dollar is firm around the day. Not a lot of news coming out. One thing you might want to check out, you can flip on CNBC. You'll see Bill. He'll be on the halftime report here in a little bit. Usually cover some of the equities on there. He's got some great intel on a lot of the different things at the Fed, especially like Atlantic Fed, what their nowcast models and things. He usually touches light on those. But you have any questions, futures option trade, and you want to check out some of the reports like the tactical insights, you can see right here that we publish those probable ranges. These do update, so I usually send those out after we get a couple that are updated or going. I outlined some of the strategies we were saying. So I was saying, hey, buy micro crude or micro gold, 1760, 1730, 1705 stop. 1685 is going to be where that stops at. I think that gives it plenty of room. I give you the refresh probable downside ranges. These are some tactical buy points, reversal, and sell points. So if you're looking at buying on silver, you'd be trying to buy near where these reversal points are at. You'd be trying to sell on some of these other points here. So, and then if you're shorting the market, you do the flip side of it. So like on the Russell 2000, you'd be looking at shorting up at 1913 and then taking it and trying to cover at 1854. So that's how to play that. But I do put all the different ranges on there. I reduced some of the corn exposure. It's been breaking down some of the wheat exposure too. If you look at on the gold market here, it is long. Got long on the November 8th settlement, 1730. We're at 1809. You're gonna want to trail your stop. You want to use this right here, your risk management for swing trading, as your stop loss. Same thing with silver. You want to trail that stop, 2207. You should be long at 2090. Here's where your sell trigger is, though. If we get down there, you don't want to turn that trade into a losing trade. Gold-silver ratio continuing to break down. Silver was gaining pretty good on gold, but we're seeing that reset here today. So that gold-silver ratio probably going to hit 80 by the end of the day. Platinum, nice little correction here. Copper correcting as well. Copper's the metal that I like to use on the short side, especially when you get these downdrafts with the U.S. equities. They got a real nice small copper contract. Kind of could balance out some of your risks. So if you're long silver, you short copper against it. WTI. Again, like I said, back in the 80s, the system is short on WTI right now. So really that's the way to play it. But I do think that there's some upside chance of momentum. This 2-year, 10-year, right down at the bottom, just reaffirming that we're going to be in this recession going forward. And the Fed Watch tool, this thing's pretty much anchored at 50 basis point at that December 14th meeting. Dollar continues to break down, although it's got a bit of a recovery here today. Should be short the dollar, 109.55. We settled at 104.50. We're trading at 105.10, but you should be using this 106.31 as your stop loss. So other than that, nothing else really stands out too much. Like I said, tune in to Bill. He'll be on the halftime show. And if you need anything, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.